So, um, it's Mike good. I think Mike it's good. So I'll be doing today the review from the past week, which was not a Passover week because Passover is another thing, but it was a bridge week. I think this is the second bridge week that we had since not this. If I'm not sure, I think this is the second bridge week. First bridge week, third, and now it was the I have been not taking notes, but it was from 29th to 03 of, so it was a bridge between April and May, basically. That's what we will be studying today. I still have things to do, as you can see. Let me highlight this. I'll put a comment here. How can I comment? Comment. No. What was the Control Shift M to be made? Uh, So I'll be now doing the not the March recap. It's like a study I make, but now I'll be going for the week 5. It's currently 2 in the morning, so 2 a.m. on Tuesday from the week 1 of May. So if this was the bridge week from 29 to uh, to 3 of Friday. So instead of placing this as week 5 right here, I'll be then making a new. This is something that you can do if you like to journal, and you should journal. You can now open a new. You can open a new month, being May 2024, and inside of it we can place this as a bridge week, like I did on February. As we can see, I can do H2, H2, not this one, H2 toggle bridge week. That was from 29 to 03 of. It's basically like the name says, a bridge between one month and another. And on these weeks, you should never. Not that I don't want to say never, but you shouldn't trade. I think it's not recommended to trade on this type of weeks. But going to the charts, first thing, as we already know, it's the news. Okay, we can see a lot of news for this week. We had Monday with news, so already Monday can be a potential expansion candlestick. We do not know yet because we need more information about the charts. Because it's like for you to be profitable, you need to have a strategy and a nice psychology and good risk management, right? Same thing here. You can't only look at the news and base your thinking, your strategy, your preparation, your plan only by news. So you see here, oh, FOMC and price is been going higher, FOMC is going to go higher. You can't do that. You can't do that. You have to couple the charts with the fundamentals, being the news and other things, right? In my opinion, we can do whatever we want. But we have Monday, Tuesday, Wednesday, Thursday, and Friday. The heaviest days are Wednesday and Friday. As we know on the weekly candle TXT, like always, it's always open. It's going to move or it's going to stay quiet, nothing. Based on the news, it's going to move. Okay. In that days, it's priced more likely to have a lot of volatility. So currently on Wednesday, because of FOMC and because we can visually see that it has 1, 2, 3, 4, 5, 6, 7 news events, so 7 boxes, rectangles of news, and then the other visually higher stacked news is on Friday, right? And both of those days are coincide and are nested with high impact news. Not normal high impact, like I explained on some previous videos, but big, massive impact news with the FOMC and then the NFP with the employment rate, right? So if we can see visually the days with more news, and those days are also coupled with that very high impact, that massive news event, if I may say so. It's late, I'm not remembering the correct words that I mentioned in the previous videos. So what's the next point? Where is the weekly candlestick likely to go? And that needs to be defined by where? Mainly by the daily chart. These 2 points are both on the daily chart. Because yes, if we look at the candlestick like this, right? Oops, one more. Okay, let me just do it differently so it gets completely well done. Oops. So where is price more likely to go? Based on the charts, I think it's likely to go higher. Why it's going to go higher? Higher? Because my drawn liquidity has been met with a bullish eye up close candlestick. We are now inside of this dealing range, right? So only two things can happen, right? After an expansion, only two things happen. Is either going to retrace back into this premium and then continue lower once more, or it's going to reversal right here. I'm currently using GBP as my main. Give me just 1 second. Okay, I'm back. I'm basically using GBP and DXY as my main bias slash weekly narrative frameworks. So you have to look at DXY, right? DXY reached a premium, generated more buy side, equalized, and now it's trading lower into a discount. So we can possibly see higher prices, right? That's a possibility now, seeing higher prices later on the week, especially after the monthly has opened and immediately traded lower, right? Same thing with GBP USD. We had price trade into the range low that I was looking. So remember that this weekly low, these three head and shoulders pattern was not a random thing that I saw and I aimed at. It was based on GBP USD range, right? And that range was also traded then and reached into a discount, right? From low to high price rate discount. So it's even that it's possible for price to trade lower and continue lower, which I'm not sure yet, because this can be a change instead of delivery and price not trades higher. And that would mean that now the XY is going to go lower, right? Or instead, this was a retracement from the expansion. This type of breakout line is going to be invalidated in some sense, right? And price is going to continue lower, right? If the XY is going to reach into this buy side, then we want to see price now trade higher on the XY, meaning that GBP and EU were going to go lower, and this was an expansion, retracement expansion. But we are not sure yet. In EU, I really believe that this is a retracement because the EU has a lot of sales, buy side liquidity. It is like this pattern, right? Wanting traders to buy these. It's my perspective. So I believe that potentially we're going to go lower. But the idea of the second point, this so this is based on news. Like this is a single category. So if I go like here, I could write news, then those, then these charts, daily, right? So these are like category, like it's to catalog the things and categorize. These are based. These are when I go to the charts and I explain to you what I think, what I don't think. There's a whole process of doing it on an expectation and everything, and you have to weigh out. You are never going to be correct 100% of the times, but you have to pick what's the highest probability thing and just stick with that. So for me, what's the highest probability? I'm not sure yet. That's why I've been not engaging, right? I would like to see a potential DXY continue on the upside, right, into this buy side pool, but price reached into 75% of this dealing range, right? So price reached into 75% of this dealing range, as we can see. We traded into this key level from the monthly or weekly. Yeah, that's a weekly or a daily, 3 day possibly, 2 week. Yeah, that traded into this, and we are now closing above it, right? We reached into this rejection block, created sells buy side with the bodies. So I potentially would like to see higher prices continue, but I know that we can see first lower prices lower into some like discount before going higher. My inevitable answer is that right now this is the dealing range and price is going out to trade on the upside after going to this fair value gap. The problem is that price needs to consolidate to trick out these traders. It needs to scare these traders are trading this mitigation block slash breakout and then to continue on the upside. Or indeed, this is a fake OTE. The change in state of delivery happened and our price is going to be lower. So only two things can happen right now, which is retracement expansion, right, to continue into the buy side, or fake OTE, some retracement as a reversal. This is the reversal slash change in state of delivery has been made, and our price is going to crash lower. Only those two things can happen. What's the highest probability right now? I would say that it's following the trend in that sense because we have equalize. And yes, if I go into the XY, I can see that there isn't equalize right here, right? So this high and this low, there's an SMT, right? So, but everything is kind of it's kind of what's the word? Not tricky, but it can go both ways, right? We can see this breakaway gap on the weekly price trading above this breaker, right? So it can potentially continue on the upside, and I can see both sides. That's the whole thing. I'm not 100% sure of a potential side because EU is very on daily. It has been very like creating this like pattern, like created here of like a trend line support diagonal trend lines before going higher. So that's basically explaining uh, the what is going to happen next. You need to base that on the you need to think where the weekly candlestick likely to go based on the XY, GBP USD and uh, EU on itself or wherever you are trading. And you need to have one market to correlate, and then another to inversely, and that's always the XY. So where was the weekly candlestick likely to go? Higher. Oh, you are talking on hindsight. No, I'm not, because there was this fair value gap. And we have an eye very close to a CB low. And a CB low is a low time frame high, as we can see right here, right? So CB's lows, right? Imagine that this is a CB. This is a low. This is an high. CB low equal low time frame high. And that's also a turtle soup. And a busy yeah, busy eye equal to low time frame low equal to turtle soup. And what's and why was price likely to go higher? So to where, right? So okay, price likely to go higher because we have this fair value gap. Okay, to where? To the fair value gap. Nice. These questions are not being asked. So we have a daily time frame or the 12-hour or 8 hour sometimes key level, validating our weekly bias. So now how do we plan that? So we have a target, we know where price is likely to go, we know we have a narrative and we have something validating where it's likely to go. But now how can I engage on that? And that goes then again on daily news. Why you want to engage on news? Because news equals expansion, right? And expansion is either two things. It's either a displacement swing slash distribution, or it's a manipulation swing slash should swing, which is manipulation basically. So there are times, so on this case FOMC, right? Where we have FOMC. This was FOMC Wednesday. There is no FOMC candlestick. What happened? Oh, right here. Okay, so let's check this FOMC candlestick, right? Was used as what? Expansion. And it's kind of the displacement swing to then be retraced and then expanded. Let's check again this Friday candlestick. This NFP. What we see? Expansion. What wasn't created? After expansion, only comes a retracement or reversal. What can you see right now? Because the price retraced lower, now it's accumulating inside of this range. So whatever happens next, happens next. This can either be a retracement to then continue on the upside, or this is the eye. This Friday eye is the potential eye of the month, or potential eye that's going to be turtle souped. So then dollar price has been made. But if this is a retracement, then if this is a retracement start, then a retracement low is going to be made on the future, then a new high be made. But if this is a reversal start, so if this expansion originated a change in state of delivery slash reversal, then the price is now going to respect this high. We expect this high to be respected, fake OTE, like I mentioned, and lower prices are going to be followed right after it. So going back into the week, what can we see? We can see a Friday down close candle, meaning that going to Monday and the week everyone was believing that lower prices were going to be seen. So we can see that we have Monday with this bullish candlestick, right? We have Monday bullish candlestick engineering a lot of liquidity. So you can see already that we have a lot of buy side, right? A lot of buy side at these highs. Uh, this is all again the CB, but we have this week 4 from April Friday high engineering a lot. When there's these highs and lows very close to key levels, you always want to aim at those, especially fair value gaps, because as we see, fair value gaps are usually highs and lows as well. But if I go into it, we can see then prices lower on Friday. So everyone going to Monday and these next weeks is going to expect higher prices because we have a big bearish Friday candlestick closing the week 3, the week 4. So everyone going to this bridge week is expecting lower prices. And we can see that Monday generating liquidity, generating more buy side, right? We have already this big pool of buy side, coupled with this week equalize and this equal lows. Tuesday then trades higher with this range high idea, right? Before then going lower. So this range high turtle soup was the weekly manipulation start. Weekly manipulation start slash weekly manipulation, which is also an expression. In this case, not it wasn't a displacement, because if it was a displacement, then it would be retraced and then continued lower. But it was then reversed, meaning that this expression was a manipulation swing and not a displacement swing. So we have this range high on Tuesday, range high turtle soup, right? trading lower, so manipulation start, manipulation end on Wednesday, London session, higher prices, retrace on those. This was the real distribution, so this is an order block, right? And this is now an balanced price range, and we want to see price. Look at this. Then on London, when price traded closed above it, we quickly then on FP, right? The news following the narrative of the charts, price expanded quickly on the upside and traded into our drawn liquidity. So it had first to consolidate and to trick traders trading below the weekly open, right? Weekly open being this line right here. I don't usually mark it, I just remember it. We have to trade below the weekly open, create this Tuesday eye of the week idea that traders trade, right? With this equalized taken and lower prices as the manipulation swing, then price expanded, manipulation start, manipulation end, expansion start, expansion end. What's going to happen next? Either a retracement or reversal. In this case, we are categorizing this as a Judas swing, not a displacement swing, meaning that then after this Judas swing happens and reversal, mean that higher prices are now more likely to happen. So reversal start, reversal, retracement, expansion. So that's basically it for this week. I'm dehydrated, dehydrated, de dehydrated. Yes, I need to drink water, need good sleep. It's 2:50 a.m. So that's basically it. Not the best, not the worst, but it's done. And that's basically it. Have a great day, great week, and yeah.